Welcome to the Ontario Mortgage and Real Estate Insights Podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Sandy, your guest host from Keller Williams Legacies, here to provide you with insights sourced from reputable news outlets to help you stay informed.
Steve Hamoan here. This is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their home ownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Today, we're talking about a critical issue facing Ontario's housing sector. According to a recent announcement from the Toronto Regional Real Estate Board, Ontario is grappling with a housing emergency. It's a situation where projects are stalling, builders are canceling developments, and many families and individuals are being priced out of the market.
Yeah, Sandy, it's a scenario that's really hitting home for a lot of people. The message from Ontario's housing sector is clear. Bold, coordinated action is necessary to boost housing construction, lower costs, and make housing more affordable for residents. This isn't just about shelter, it's about the foundation of the economy and the heart of our communities.
Absolutely, Steve. What stands out to me is this unified call to action from such a wide array of stakeholders. We're seeing everyone from builders and realtors to trade associations and not-for-profits, all speaking with one voice. They're urging every level of government to move quickly to unlock housing supply, cut costs, and restore affordability by accelerating both ownership and rental housing delivery.
It's interesting, Sandy, that the announcement does acknowledge the positive efforts made so far by the federal, provincial, and municipal governments. They've been working on policy developments, zoning reform, and funding programs to encourage more housing construction. The recent provincial housing bill, the Fighting Delays, Building Faster Act 2025, is one such initiative aiming to cut red tape and lower construction costs.
That's right, Steve. But despite these efforts, the call for more action is loud and clear. The announcement also highlights potential disruptions that could impact the housing ecosystem, like trade wars and economic uncertainty. These factors are outside the direct control of governments and industry, but need to be considered as we navigate this uncertain macro environment.
And let's not forget, housing supports over 1.2 million jobs and contributes more than $143 billion in economic activity yearly to Canada's gross domestic product. Rising costs and regulatory challenges are slowing new housing starts, which puts skilled trade jobs at risk and affects related sectors. This is why a united focus on delivery is crucial to protect jobs and support innovation.
Exactly, Steve. The announcement lays out several policy priorities for immediate action. For instance, positioning housing as an economic driver, modernizing outdated tax rules, and cutting costs for homebuyers. They're also advocating for innovation in construction methods, freeing up land, and ending exclusionary zoning to allow a wider mix of housing types.
And they're calling for incentives to encourage private capital investment in both rental and ownership housing. Reintroducing the multiple unit residential building tax incentive is one of the suggested measures. The sector is ready to partner with the government to reignite momentum, rebuild confidence, and restore affordability through partnership, innovation, and investment.
It's a comprehensive and ambitious plan, Steve. The collaboration across all levels of government and the housing sector is essential to deliver the homes that our communities urgently need. There's a strong sense of urgency and a clear path outlined to address the challenges.
In a surprising turn of events, Ontario's largest ever disciplinary case against a home builder has come to an abrupt end. The Home Construction Regulatory Authority, or the HCRA, has dropped all charges against Briarwood Development Group, a developer accused of extracting more than $18 million in additional payments from 142 pre-construction homebuyers.
That's right, Steve. This case has reignited the debate about the province's ability to protect consumers in a housing market that's becoming increasingly volatile. The regulator's case collapsed amid a lack of evidence, which is concerning. Briarwood, was initially facing potential fines exceeding $32 million for allegedly pressuring buyers to pay more after signing agreements and paying deposits.
The collapse of the case is being attributed to the disqualification of the HCRA's expert witness and the regulator's failure to provide direct evidence for the majority of the affected properties. They presented evidence for just 14 of the 142 properties and relied on testimony from only 6 buyers. That's a major shortfall in evidence.
Absolutely, Steve. Toronto real estate lawyer Bob Aaron, who has represented some of the buyers, has called the outcome a horrible precedent for future buyers. He emphasized the importance of buyers having the confidence that what they sign for is what they'll get. It's a sentiment that resonates with many in the industry.
And with the HCRA unable to secure accountability, buyers and brokers face ongoing uncertainty. For instance, Jagat Patel, a buyer who refused to pay an extra $175,000 for a home in Stayner, expressed frustration at the lack of regulatory enforcement. This situation is likely to lead to heightened due diligence requirements and more complex consultations for brokers.
That's a good point, Steve. The outcome may also erode buyer confidence in regulatory protections. This could potentially slow down pre-construction sales and increase the risk profile for mortgage lenders and insurers involved in these transactions. It highlights the need for brokers to adapt by providing more comprehensive risk disclosures and closely monitoring regulatory developments.
Indeed, Sandy. There are also calls for reform intensifying. MPP Tom Rakočević, the New Democratic Party critic for public and business service delivery and procurement, has questioned the HCRA's ability to gather sufficient evidence. He's suggesting that perhaps changes in the HCRA's team and staff are necessary to carry cases like this forward effectively.
Meanwhile, buyers like Patel are left weighing costly litigation as their only remaining option. And let's not forget, the HCRA recently faced criticism in a report from Ontario's Auditor General. The report found that the agency's licensing and oversight left new homebuyers vulnerable to risky builders and vendors, which only adds to the urgency for reform.
It's a complex situation, Sandy, and it underscores the need for a robust regulatory framework that can effectively protect consumers while fostering a healthy housing market. As always, we'll keep an eye on these developments and continue to provide our listeners with the insights they need to navigate these challenges.
Steve, as we continue to see a decline in residential housing prices in Canada, particularly in Toronto, it's interesting to note that commercial real estate values have remained stable. This is despite the overall economic fluctuations and interest rate hikes by the Bank of Canada.
That's right, Sandy. It's a fascinating dynamic. While homeowners are feeling the pinch with an average price drop between 10 to 15% since early 2022, commercial properties seem to be holding their ground. This stability in the commercial sector is attributed to balanced market fundamentals and the consistent support of capital.
The resilience of commercial real estate amidst these economic shifts really highlights its role as a stabilizing force in the market. It seems that investors are maintaining confidence in commercial properties, which could be due to their long-term income potential and the diversified nature of commercial investments.
Absolutely, Sandy. Commercial real estate's ability to attract and retain capital is a key factor here. It offers a hedge against inflation, which is particularly appealing when residential markets show volatility. Plus, the demand for retail and office spaces has shown some positive trends recently, contributing to this stability.
And it's worth noting that, despite the challenges in the residential sector, the commercial market's steadiness might provide some much-needed balance to the overall real estate landscape in Toronto. It could help offset some of the economic pressures that are currently affecting homeowners and potential buyers.
Precisely, Sandy. The commercial sector's strength can indeed act as a buffer. As demand for retail space turns positive and office leasing accelerates in certain regions, these factors underscore the potential for growth and recovery in the broader market. It's crucial for investors and stakeholders to recognize these trends and adjust their strategies accordingly.
Looking ahead, it seems that the commercial real estate market in Toronto will continue to play a pivotal role in the city's economic resilience. As we navigate through these uncertain times, the stability of this sector will be something to watch closely.
Indeed, Sandy. It's a reminder of the importance of diversification in real estate investments. While residential markets may face headwinds, commercial properties offer a steady alternative. We'll continue to monitor these developments and provide insights to help our listeners make informed decisions.
While many areas in the Greater Toronto Area are experiencing a decline in condo prices, there's one place that's bucking the trend. Aurora has seen a significant rise in condo prices, with a 14.9% increase year over year. This is quite a contrast to the downward trends we're observing in other parts of the region.
That's right, Sandy. The average condo price in Aurora has jumped to $717,800, which is an increase of $92,800 from last year. This leap is partly due to the scarcity of new condo developments in the area compared to others. With fewer new units coming online, the existing ones are seeing a surge in value.
It's fascinating how a few luxury condo developments can shift the balance in local prices so dramatically. In regions like Aurora, where tract subdivision housing is more common, the introduction of new luxury condos can significantly impact the market.
Absolutely, Sandy. The limited supply of new condos in Aurora is creating a unique situation where demand is driving up prices. This stands in stark contrast to areas like Caledon, where prices have plummeted by 21.6% year over year, marking a decline of $179,975.
And it's not just Caledon feeling the pinch. Milton, Mississauga, and Brampton are also seeing declines, with Mississauga experiencing an 8.13% drop, and Brampton a 9.52% dip in condo prices. It's a tough market for sellers in these areas.
These trends highlight the importance of location and the type of developments that are being introduced. Aurora's situation shows that even in a broader downturn, specific locales can thrive if the conditions are right. It's a reminder for investors to consider the unique dynamics of each market.
Indeed, Steve. For homeowners and investors in Aurora, this rise in prices is certainly welcome news. It underscores the need for a keen understanding of local market conditions when making real estate decisions.
And as always, it's important for buyers and investors to stay informed and adaptable. The real estate landscape can change quickly, and understanding these dynamics is key to navigating the market successfully.
In our final segment today, we're bringing you an update on a significant development in the trade landscape that's adding fresh uncertainty to Canada's housing outlook. Over the weekend, former President Donald Trump announced a new escalation in the United States-Canada trade war by implementing additional tariffs on Canadian imports.
That's right, Sandy. Trump's decision to increase tariffs by another 10% is creating ripples throughout the Canadian economy, particularly impacting sectors that are already feeling the strain. It's unclear if this is a blanket tariff or targeted at specific goods, but it's certainly adding another layer of complexity for hopeful homebuyers and investors.
The Canadian Real Estate Association has noted a slow but steady improvement in home sales activity, which is promising. However, the ongoing trade tensions are a wild card that could derail this progress. The uncertainty makes it difficult for potential buyers to feel confident about the future economic landscape.
The Canadian Imperial Bank of Commerce's Deputy Chief Economist Benjamin Tal has pointed out that these tariffs are unlikely to disappear quickly. They're generating significant revenue for the U.S. government, despite the burden on American taxpayers. This suggests that the tariffs might stay in place long after Trump's tenure.
It's interesting to see how the political climate is influencing the housing market. The Canada Mortgage and Housing Corporation has identified the outcome of these trade talks as a key factor in shaping the housing market's trajectory in the coming months. It underscores the interconnected nature of global politics and local real estate.
Absolutely, Sandy. The Bank of Canada is also in a challenging position. With these new tariffs, there's speculation about more interest rate cuts to cushion the economic impact. Analysts are watching closely for the central bank's next move, especially with the potential for further rate reductions in 2026.
The potential for rate cuts could offer some relief to homebuyers, but the broader economic uncertainties remain a concern. It's a reminder of how external factors like international trade policies can have a profound impact on the real estate market.
As we wrap up today's episode, it's clear that the housing market is navigating through a complex web of challenges. From trade wars to economic policies, each element plays a crucial role in shaping the landscape. We'll continue to monitor these developments and keep you updated with the latest insights. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time, and stay informed with the latest industry insights.